Nvidia stock is banned from sending its most advanced AI chips to China due to US regulations citing national security risk. In response, Nvidia has developed weaker chips that are able to bypass these regulations. Could this be bad news for Nvidia investors? You know what else is bad news for Nvidia investors? That you have yet to hit that thumbs up, subscribe button, and checked out my free Substack link below. All jokes aside, in today's episode, we will do the following. First, understand Nvidia's regulations. Number 2, take a closer look at recent AI and China news. And finally, finish off with my final thoughts. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's start off with the big news. So Bloomberg has reported that Chinese regulators are recommending AI startups to stop buying Nvidia's H20 AI accelerator, citing that a potential ban would create new problems for such businesses. So for those that are not familiar, the H20 is Nvidia's AI chip that is bypassing regulations legally. And right now, I believe if these reports are true, it makes perfect sense, right? If you are a Chinese government, you wouldn't want your Chinese companies to be reliant on a US company, which they can ban all these AI chips in the future. And if they banned all these AI chips in the future from your country, it's going to completely push back on any development you might have with AI. So this completely makes sense. Now, for those that are not familiar with these regulations, let's kind of take a closer look at what's happening. So earlier on about a year ago, I believe, United States regulators came out saying that they're prohibiting Nvidia from sending advanced AI chips like the H100, the H200, the B100, and so on to China. One of the main reasons is citing national security concerns. And personally, I believe this is true. I think whoever owns the AI market is going to be the leader in the world right now. So I think the United States wants to make sure that they stay in the strength in a stance of power. And one of the ways is maintaining a leadership in the AI market. Now, the great thing for Nvidia, even though they did lose out revenue in this market, there is strong demand for AI chips all over the world right now, and I believe that's going to be the case. We continue to hear reports, and I've done plenty of videos how we're moving into bigger and bigger data centers, which are only going to be filled with GPUs in general. So right now there is such a huge demand and such a huge appetite for AI chips that this isn't really impacting the stock right now. Now, in response to these regulation controls, the Nvidia collaborated one way or another, or was kind of in touch with US government to design a chip that would be able to pass regulations, a regulation compliant chip. They developed the H20, and most likely for the future Blackwell, they're going to have the B20 for the Chinese market. And this is to help them kind of maintain a presence in the Chinese market overall. Now, in response to that, Chinese competitors kind of seized the opportunity. Huawei was one of them that introduced the 910B and the 910C chips to attempt to capture Nvidia's market share. Now, unfortunately, because they are a Chinese company, they do face difficulties in matching Nvidia's performance due to some of the regulations that we'll see in a bit. But now the most recent thing is this kind of Chinese market shift where Chinese companies are encouraged to buy from domestic chip makers instead, gradually moving away from Nvidia products, which in the long term, if we eventually need that demand from China, that can be a long-term impact for Nvidia's revenue position and Nvidia's market position in China. This is such an ongoing space, but this is exactly where we're at right now. And I hope this provided some great information. If it did, like I said, make sure to hit that thumbs up and subscribe button. Now that we know about kind of Nvidia's regulations, there are also other regulations that the United States has kind of imposed into semiconductor companies, or companies even that are not United States based, that deal with the semiconductor industry. For example, with chip manufacturers, TSMC, a huge chip manufacturer, cannot produce advanced chips for Chinese customers, and they're restricted to older process nodes for China. Equipment companies like ASML cannot provide advanced lithography equipment to China, restricted from selling EUV machines to China. Very similar other equipment manufacturers are also restricted to send certain chips to China, certain equipment to China. And then you have companies that are ASIC designers, or ones that develop chips or help companies design their own chips, like Broadcom. They must ensure that designs comply with regulations. We can see how there's a variety of restrictions happening here in the United States that's kind of impairing the Chinese market to kind of grow at the same type of pace as kind of US companies. And I think I wanted to mention this because this kind of pushes us to the next topic of Nvidia's competitor in this space, and that's Huawei. Huawei is probably one of the biggest competitors in the Chinese market for AI chips. They recently have their 910B, and Nvidia's H20 is still better than the 910B, but recently they started to send samples of the 910C to some of the big players out there in China. So obviously this is added competition for Nvidia in that space. But like I mentioned, at the moment, I'm not necessarily too worried because one, there's huge appetite in the market right now, and Nvidia's H20 and most likely their B20, while they might not be performantly as strong as maybe some of these Chinese competitors' chips, Nvidia is not just a hardware company. And we know when it comes with AI, you need also the software market, you need the infrastructure, you need the libraries, you need, the list goes on. And Nvidia has that strength to be able to serve that market and still being legal here with US regulations. So again, it's not just about the performance of the chip, but everything else that can happen and you can do with that chip in general. So even if competitors might have a little bit of a leg up in Nvidia on China, because Nvidia has to ship weaker versions, Nvidia still has some pros for that industry. Now, I mentioned earlier that Chinese market has some regulations in forms of what equipment can be sent down to them and who they can use for manufacturing. For example, Huawei, this Chinese AI company, most of their chips are being made by the Chinese fab SMIC. Not to be confused by SMCI, Supermicro. This is a huge manufacturing company in China, and unfortunately, it is reported that they are facing bad yields. And like I mentioned, right, because of those equipment challenges that they can't get and the other restrictions, they have things like limited access to equipment. They have difficulty in achieving high precisions. They lack technology for things like advanced packaging, insufficient tech equipment, and the list goes on. And obviously, this kind of moves on to yield and cost implications. If you have weaker technology, your yields are going to be lower. Your defect rates are going to be higher. Your cost per working chips is going to increase, longer time to market. You're going to have a lot of cost increase if you're not using the best tools. So obviously, this is another thing that Nvidia's competitors in China have to worry. So that's kind of pushing that market there in China. Like I mentioned, I really wouldn't be too worried about Nvidia losing too much space in there. They still have some pros of why they continue to sell H20 and B20. And even if they can't sell those chips, I think right now there's going to be plenty of demand of AI chips all over the world that at the current short term is not a necessity. Now, another thing that is happening for Nvidia is TikTok owner, and this came out about a week ago. TikTok owner ByteDance believes that there are reports that they are tapping with TSMC to make its own AI GPUs to stop relying on Nvidia's chips. Because it says that in China, they spent over $2 billion on Nvidia AI GPUs, the H20. So it seems like TikTok is trying to reduce their dependency of Nvidia. There are reports that this is not true and that ByteDance denies the rumors of developing in-house AI chips to reduce its dependency in Nvidia. They're saying that they're focusing on cost optimization. And we've actually talked about this in the past, where there's a big difference between ASIC solutions and kind of merchant GPUs, where merchant GPUs are very important for developing future workloads and to being able to be adaptable, while ASIC solutions are just very important for cost optimization. And ByteDance, I guess, wanted to make it clear they don't want to get on Nvidia's bad side and saying, hey, look, we're not trying to reduce the dependency of you. We still need your H20s, but we're trying to reduce some of the cost on certain, or trying to be cost, or trying to optimize our cost efficiencies by developing chips on where we know we can use them. And this isn't the only company doing this. I mean, Amazon has a chip for training, the AWS Trainium, and they also have a chip for inferencing, the AWS Inferentia. And this is reportedly what ByteDance is trying to do. They're trying to get a chip for training, and they're trying to make a chip for inferencing. And Amazon, who has done this for quite a while, is still very, very dependent on Nvidia chips. So again, these are two markets where we continue to hear a bearish case, but personally, I don't believe there's much to be bearish at the moment. Obviously, technology evolves at such a rapid pace that maybe next year and the next 2 years, I might have a different thought. But at the moment, I'm not worried for the Chinese market or for the ASIC market as well. So right now, Nvidia is currently sitting at $121. Like I mentioned, my overall thoughts on the topics we talked about. Just a quick recap of where I see Nvidia stock right now. I think right now is more of like very, 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 very small dollar cost averaging if I wouldn't be patient. If I believe patience is definitely a key to investing. And I believe Nvidia is definitely a great buying opportunity at those 100 levels or low 100s. And many might say, hey, we're never going to get to those levels, but less than a month ago, we were there. Less than 2 months ago, we were also there. So I think the market gives opportunities to those that are patient. I personally would wait for those levels, but who knows? Maybe those levels might never come. If I couldn't wait or be patient, I think small dollar cost averaging is how I would play it. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.